All right, so now our session is being recorded. So we've got Susan in the chat room now. And Susan, what homework problem do you want to work on? Do you have a particular homework problem you want to work on? Yes, there are quite many. You want to start with homework, the one that's due tomorrow, which I believe is, let's see, pull up the schedule really quick. I should have all these memorized. The one that's due tomorrow is homework 19. Very good. All right. Very good. So let me just pull up homework 19 so that we're all on the same page. And let's go to, all right, let's go one more place. One sec, Susan. Sorry, a lot of dead time right now. Just pulling up the homework so we can all, okay. Okay, so our numbers are obviously going to be different, right? The last one, yeah, problem number 3. That's the longest one. Yeah. So I don't want, since it's due tomorrow, right? I don't want to necessarily walk through the whole thing part by part um, because that basically is then just kind of giving the answers to the whole class, right? So we can start through it. I think what I'll end up doing is we can go through maybe parts 1, 2, and 3. And then I can leave 4, 5, and 6 to the rest of the class. Or do you want me to focus on problem 3 since that seems to be the longest piece? What makes sense? That's okay. Don't worry about trying to connect. You can just chat with me through the chat box. Okay, the last question was which, I don't want to go through the entire problem since it's due tomorrow because I don't want necessarily the whole class to. So what I think I'll start doing is we'll just start at the beginning, see how much we get through, and I think I'll stop at part 3 of the problem. If that's okay. Or do you want me to start with part 4? How far have you gotten on the problem? Oh, okay. All right, well, we'll get started then. Okay. All right. So let's see here. How can I show? So without showing you, let me do something really quick. I'm going to copy the problem into a Word document. And I'm going to share screen. Okay. So there we go. Oh, you would rather start homework 19 because okay, I'll go back to 18. All right, let's go back to 18 then. Okay, yeah, this one was a real big one. Okay. One sec while I paste this. Okay, so here is problem 18, or homework number 18, problem 4. Okay. And you stopped at 4.3. There are only 3 parts to the problem. Oh, question 3, the last big part. Okay. All right. So the last part asks to prepare a cash budget by quarter and then a total for the year. Assume that selling and administrative expenses are paid in the month that they're incurred. So, okay, yeah, there's obviously a tremendous amount of information that um, has to be that is included in this, right? So let's just kind of bring in the context of the problem. So the president of Univax Inc. has just approached the company's bank seeking short-term financing for the coming year, which is year 2. Univax, so basically we're towards the end of year 1. Univax is a distributor of commercial vacuum cleaners, and the bank has stated that the loan request must be accompanied by a detailed cash budget, which is what we need to kind of work on. That shows the quarters in which financing will be needed, as well as the amounts that will be needed and the quarters in which repayments can be made. To provide this information to the bank, the president has directed the following data be gathered from which a cash budget can be prepared. So in part A, we've got budgeted sales, merchandise purchases, as well as actual sales and purchases for the last quarter of year 1. And then some assumptions, right? So the company typically collects 48% of the quarter's sales before the quarter ends, and another 50% in the following quarter. And then the remainder is uncollectible. So 2% is going to be something that they won't be able to collect at all. And the pattern of collections is now being experienced in the actual data for year 1, fourth quarter. Okay. So basically starting in the fourth quarter of year 1, we can assume that 48% of that quarter's sales will be collected in the next, before the quarter ends, and then the next quarter, 50% of it will be collected. Some 20% of the quarter's merchandise purchases are paid for within the quarter, and then the remainder is paid in the following quarter. And then selling and administrative expenses for year 2 are budgeted $245,000 per quarter, plus 10% of sales. The fixed amount, which is the $245,000, $75,000 is depreciation, which means that's a non-cash charge. So you're not going to pay. There actually is no cash needed for that $75,000 per quarter because it's depreciation. The company will pay $50,000 in cash dividends each quarter, so that's important to know for our cash budget. Land purchases will be made as follows during the year: $220,000 in the second quarter and $67,500 in the third quarter. Those will both be necessary in preparing our budget. The cash account contains $67,000 at the end of year 1, and so the company must maintain a minimum cash balance of $40,000. So anytime our cash balance looks like we're going to get below that, then we have to make some adjustments or we basically have to borrow money to ensure that we keep our $40,000 minimum amount. And the company has an agreement with a local bank that allows the company to borrow up to a total loan of $500,000. So that's the maximum amount that we can borrow, and the interest is 1% per month, which is ridiculously high, if I do say so myself. And for simplicity, we will assume that interest is not compounded. The company would, as far as it is able, repay the loans plus accumulate interest at the end of the year. And then currently, the company has not borrowed any money against that. Okay. All right. So let me begin with preparing. Okay. If I were you, this is how I would begin. Right. So first, we need to begin our cash budget. We need our cash balance, which is the beginning. Okay. And we're going to create our first quarter, our second quarter, our third quarter, our fourth quarter, and then our total year amount. Okay. And then we get collections from sales. Okay. And we know our beginning balance for the first quarter is the $66,000. Okay. And how do we know that? It's because of Part G. The cash account contains $66,000 at the end of the year for year 1. Okay, so that's $66,000. Hold on, let me just Okay, so let's add the collections for that we'll receive in the first quarter. Now, we know that in the following quarter, we're going to get 50% of the previous quarter's balance. So we know that we're going to collect 50% of the previous quarter's sales, which is 50% of the fourth quarter's sales, which was $750,000. So I'm going to put in 750,000 and I'm going to take 50% of that, which is 375,000. You with me so far? Yeah, I'm sure your numbers are much better. But anyway, we'll use my numbers for now. How's that? Okay, so now we've only got the previous quarter's amount. Now we also have to include the current quarter, right? So this is the previous quarters, right? And I'm going to go ahead and line that out, actually, quarter versus the current quarter. Okay, so I'm going to move this amount here. Okay, so the current quarter is 850,000, and we collect 48% of that. So that's 850, 0, okay, and we're going to take 48% of that. Okay, so that means our total is $783,000 of collections. Okay, so we're going to bring in $783,000 worth of cash from the sales that we generate between the previous quarter and the current quarter. Okay, so that gives us a total cash available amount of the 66 plus the 783. Okay, so right now we're at total cash available of $849,000. Okay, now we need to subtract any disbursements. Okay, and we're going to include merchandise, right? So basically, all of the products that we're going to buy that we eventually sell, our selling and administrative expenses, our dividends, and any land purchases for the quarter. Okay, so if we go back here, this says 20% of the merchandise purchases are paid within the quarter. The remainder is paid in the following quarter. So I'm going to break that out too between the previous quarter, if I can spell correctly, and the current quarter. So again, the previous quarter in year 2, and the first quarter of year 2 actually responds to the fourth quarter of year 1. And the fourth quarter of year 1 purchases were $375,000. So we have $375,000 and we paid 80% of that in that quarter. And then in the current quarter, we took 20% of an estimated $510,000 worth of purchases. So times 20%. So that's in total $402,000 worth of purchases. Okay, so far so good. Let me know if sure. Okay. All right, and then our selling and administrative expenses. This says they're budgeted at $245,000 plus 10% of sales. Okay, so $245,000 plus 10% of sales, and our sales for this month were $850,000, or projected to be $850,000. Okay, so that's a total expense amount of $330,000. Now, the other key here says is that $75,000 is depreciation, and that's a non-cash expense, right? We're not actually paying anybody. There's no check cut or wire transfer made for the $75,000. So since this is a cash budget, we're only interested in actual cash disbursements. So I'm going to subtract the 75,000. Okay, so that gives us a total selling administrative expense cash outlay of $255,000. Okay, and then finally it says dividends. Where is it? Right. There it is. The company will pay $50,000 in cash dividends per quarter. So we're going to put $50,000 in there. And then we had the land purchases were going to be in the second quarter, and in the third quarter we didn't have any in the first quarter. So that's a 0. Okay, so our total disbursements was the 402, the 255, and the 50. Because remember that the 402 is just the previous quarter amount plus the current quarter purchases. So far, so good. I do like this. I hope I better like this because this is my career, right? So this is the kind of stuff yeah, it's I'm kind of weird. I kind of like this stuff. Do I do, cash reconciliations like on a Friday night with my wife as date night? No, I don't do that. But this is the kind of stuff that my my mind does prefer to do, which is why I enjoy my job so much. So anyway, so we've got your excess uh, of receipts, okay, over disbursements. Now, if we had a deficiency, that would be a negative number. And in this case, we will actually have a positive number, you can see, because it's cash available minus your disbursement amount gives us an excess of $142,000, which is basically our ending cash balance. Now, if we needed financing, let's create a financing category here. And we'll put borrowings, repayments, interest. Okay, we're just going to include this. We'll use this for the next quarter. And then total financing, which would be the sum of these. Okay, and then so your total financing dollar amount, so if you had to borrow money, and then if you paid any of it back and paid any interest, okay, this is money. Borrowings would be money coming in, and repayment and interest would be money going out to the bank. Okay, and this is just the sum total net amount of cash that you're basically receiving from the bank or paying out, depending on the quarter. So your cash balance, your ending cash balance is going to be any excess or deficiencies plus any money you receive from financing. So I know at the end of quarter two, or excuse me, quarter one, we had an ending cash balance of $142,000, which also means our beginning balance for quarter two is going to be the same as the ending balance of quarter one. Okay. Yeah, so I get that, putting them all together tight, as you're kind of going through it, I know that's a natural thing to do. Breaking it up kind of helps visualize it a little bit better. But that's just something that, that just kind of comes with experience and what helps, you kind of organize it in a way that makes sense for you. So yeah, in accounting, your ending balance in one period is also the beginning balance in the next period. Okay, so you can always ensure that, for example, that your ending balance in quarter two is also going to be your beginning balance in quarter three, And then the same thing, your beginning balance in quarter four is going to be the same as the ending balance in quarter three. Okay, so I'm going to spread these formulas out a little bit since I've got some formulas. This way, when you do your calculations, it will just come up easy for you. And you can just plug in numbers. Yeah. Ooh, yes. Using Excel to your advantage is always a good thing. Okay, so the collections from the previous quarter, which was quarter one, was 50%, right? 50% in the following quarter. So we get 850 times 50%, and then we get 48% of the current quarter, which is another 850. So 850 times 148. So right now we've got $833,000 of cash collections, okay, giving us a total cash available balance of $975,000. Merchandise purchases, okay, so in the previous quarter, which was Q1, we had 510, and we're going to pay 80% of those. This is another. Okay. So we've got 510,000 times 0.8. That's $408,000. And in the current quarter, we had 527,000. So there's 20% of that. Okay. So that means we purchased or we paid $513,400 worth of goods in this quarter. Selling and admin is the $245,000 plus 10% of the current period sales, which is $850,000. So 850, and then we're going to subtract the $75,000 for depreciation, which gives us $255,000 again, and then $50,000 in dividends, which frankly we can just copy that over because that's the amount in dividends that they're going to make every single quarter. And then land, they did purchase $222,000 worth of land. So remember, go back to section F, and we have the $222,000 in the second quarter. So that is a disbursement, and oh, my formula does not include the land, so I have to update my formula back in Q1 and bring that over. All right, so now we have spent $1,040,400, but we only had $975,000, leaving us a deficiency of $65,400. Now remember, going back to the problem, we need to ensure that we have a minimum of $40,000 in our cash balance. You had a question, 66,000. Oh yeah, your number is 66. Yeah, so my number is 40. So I need to borrow enough money to get me to $40,000. So that means I need to borrow basically $40,000 plus the absolute value of the 65.4, which is, because I need to borrow the 65.4, right, to get that down to zero plus $40,000. So that's $105,400. Okay. Let's go ahead and bring this over. So that gives me now my ending balance of $40,000 in Q2, and then in Q3, my beginning balance is $40,000. What's hard for you? Oh, the minimum amount? The minimum cash balance? Yeah. Yeah. No, I know that's a tricky piece of information that you kind of have to remember. And that's the challenge with this problem, is they give you so much information related to the problem that you kind of have to make sure that you organize it. One thing you could do is, as you go through each quarter, kind of check off each letter to make sure that you've taken that into account. in the problem for that current quarter. That way you ensure that you've gone through each of the steps and that each of those are included in your problem. So the borrowings is a little tricky. But just know that you don't want to have a deficiency, so you're going to borrow at least the amount to get that down to zero, plus your minimum balance. Okay, so anytime you have a deficiency, you need to zero that out, and that amount, the amount you need to zero it out is your starting point, plus you need your the minimum balance. So the sum of those two is equal to your borrowings. So good. I'm glad that that helped you understand how to calculate your borrowings. So that's good. Okay, so now we're done with Q2. So now we'll go to Q3. So Q3, again, we need 50% of the previous month. So that's in the previous quarter, plus the current quarter, which is $1,150,000, and we get 48% of that. Okay, so that means we, wait, I think I'm off a zero. Yep, I missed a zero. Put that in, there we go. Okay, so that means we have a total cash available of $1,017,000, and our merchandise purchases, the previous quarter, $527, and we're going to pay 80% of that. And then the current quarter, which is $690, we're going to pay 20% of that. Okay, so that means we dispersed $559,600 towards merchandise purchases. The selling and administrative expenses, again, $245 plus 10% of the current quarter sales, so $245 plus 10% of the sales, which is $1,150,000. Okay, and again, we're subtracting depreciation because that's a non-cash. So that's $285,000 plus our $50,000 in dividends. And then, so we've taken care of A and B and C and D. And now we've taken care of E also. Now we're going to the land purchases, which is $67,500 for the third quarter. So that's good. I'm glad it seems to be helping. So now we've got total disbursements of $962,100, giving us an excess of $54,900, which is perfect. We don't need to borrow any additional money, and okay, so we've hit our minimum balance in G. We didn't have to borrow anything, and it says here the company can actually repay the loan at the end of the year, so we don't have to worry about repaying it at all during the third quarter. Okay, so we're done with Q3. And so our ending balance of $54,900 is now our starting balance for Q4. Now, we'll just kind of go through again Q4's amount of sales, which we'll start with the 50% of, we'll collect 50% of the previous month's sales, which is $1,150,000 times 50%, and then 48% of the current month's sales. Zero times 48%. So that means our cash collections is $1,220,300. Okay. In the previous quarter's the disbursements in the current quarter, we just start with the previous quarter's purchases, which was $690,000, and we're going to pay 80% of those. Okay, and then the current quarter, we're going to pay 20% of $738. Oh, 20%. There we go. So that's $699,600 related to purchases. Okay, and then selling admin, again, $245,000 plus 10% of the current month's sales, which is $1,230,000. and then subtract the 75,000 for depreciation gives us disbursements of 293,000. We had $50,000 in dividends, and we had no land purchases this year. So that gives us a total disbursements, or this quarter, total disbursements of $1,042,600. And that gives us excess of $177,700, which works out well because we have to pay back our loan, our $105,400 loan. So we have no additional borrowings. We're going to pay back, okay, the loan that we made. Now we have to calculate interest. Okay, so interest, we borrowed it at the beginning of the second quarter. It's 1% per quarter, which I guess actually, now that I think it's a 1% per quarter. Let's go back. No, it's 1% per month. Yeah, that's what I thought. So 1% per month, and there are 3 months in every quarter. So we borrowed it in the second quarter, 3 months in that quarter, there are 3 months in the third quarter, which means there's 6 months worth of interest. Okay, so you calculate interest, so it's 1% times 6 months times 105,400. Okay, and we paid it at the, actually it's 9 months. I apologize, because we have to pay, we're paying at the end of the fourth quarter. And this is a cash disbursement, so it should be a negative. Okay. So, okay. So you just have to, yeah, I know. It's easy to miss that one, to think through the interest. Obviously, interest is charged based on time. So you're assuming that you got that loan on day one, which in reality, not a realistic assumption. But for the purpose of a model like this, assuming that you get the disbursement from the bank, or excuse me, get the cash inflow from the bank at the beginning of the quarter in quarter two, just makes the model that much simpler. Because if you were to have to assume that you got the cash in the beginning or in the middle of the quarter or on some random day during the quarter, your calculation of interest would be that much more challenging. So assuming that you get it, so by making the assumption that you got it the first day of the second quarter, actually makes your calculation a lot easier. You just have to think through that it's going to be 3 months in Q2, 3 months of Q3, and 3 months of Q4, or in other words, 9 months of interest. Okay, so once you calculate interest amount, this is the amount that you're going to disperse to the bank to repay the loan. Subtract that amount from your excess. That leaves you with an ending balance of $62,814. Okay, so now we've got all of our activity done for the 4 quarters. So now this is where it gets a little tricky. In most of these things, you're going to sum them, but when it comes to the balances, you're not. You're going to start with your beginning balance is your beginning balance in Q2. Okay, and then your total cash collections will be the sum of the 4 quarters. Okay, so far we're at, hold on here, I got a different number. Oh yeah, no, okay. And then, no, I'm just looking at the wrong line. I'm just checking my work as I progress, just to make sure that we're all on the same page. So now, you can do one of two things. You can sum these 4 up, which actually would make a lot of sense because you'd have to subtract that. So actually, let's go ahead and sum the beginning balance with your total collections, and that gives you your total cash available. Okay. Now you can also sum the next several lines together, and I'm just going to sum the total rather than the individual quarters, so we don't double up. Okay, and then our land, which means in our total disbursements is 3752100. Okay, and then now you can copy your equation over. So this is now the difference between the total cash available and their total disbursements. Okay, and then you can do the same thing. You can sum across your borrowings, your repayments, and your interest. Okay, and then sum across your total financing, which is basically just costing you $9,486. So now your ending balance, so this number should equal the 6284 if we did all of our job, our math right. So we drag this over, and sure enough, there's your excess minus your interest of 62,814. The screen's too small? Oh, okay. Well, that might make it really hard for everybody to see. Let's see here. Is that better? Okay. Sorry about that. That might make the that might make the recording hard for everybody to see, but we'll kind of review. Were you able to see at least what I was doing throughout each of the quarters? Was it way too small? You were very close to the screen. Okay. Well, my bad. I apologize for that. What I will do to make up for it, I will actually I will send this template out. How's that? To everybody along with the recording, so that you can kind of follow along as you listen to the recording. So does that work? Yeah. Okay. So anyway, so now again, your beginning balance for the total year is the same as the beginning balance of your first quarter, because again, think about your total year is talking about the whole range of activity for from the beginning of first quarter to the end of the fourth quarter. Okay, so your beginning balance should be the beginning balance of the first quarter, and then your ending balance should equal the ending balance in quarter four. Okay, and so the way we had summed this up um, makes it work. Okay, so for the year, we started with $66,000 worth of cash. We collected $3,758,400 from our sales. We spent $2,174,600 in merchandise purchases, and then another $1,088,000 in selling and admin expenses. We paid $200,000 in dividends and $289,500 in land disbursements. So we spent $3,752,100 throughout the year. So if you look at this, the cash that we had available throughout the year and the disbursements, we collected more cash than we needed. However, during the year, we fell short during one quarter. Okay, so in quarter two, we needed to actually utilize the loan that the bank had given us, and we paid it back at the end of the fourth quarter. Okay, so even though as a whole from the year we received more cash than we paid out, we did have one quarter where that wasn't the case. So that's why we had to go to our credit card, so to speak, and borrow money. We paid it back plus our interest, and that gets us to our ending balance of $62,814. Yeah, let's see. I hope fellow students aren't mad at you for not asking about future questions. Oh, well, you know what? That's okay. This will be helpful, I'm sure, for any problems that are in the exam. And I know there are other students that are struggling. The students that are doing fine in the class, I'm sure this will be just good review, but for those students that are still kind of struggling, this will be helpful for them. So no, I think they'll be perfectly fine with this. And yeah, the total understanding the total year and what goes in which buckets is really important. Okay, in some cases you can sum the activity, such as your total collections or your total disbursements. Okay, but when it comes to the balances, those should not be summed across. Those those are treated differently than any of the activity that happens throughout the year. Okay, so that's part 3 of homework 18. Ta-da! Yeah, yeah. I wish I wish I could make it look like the the Food Network, right? Where you put something into the oven and then a split second later you pull it out, it's already done, right? But this way at least you saw how the sausage is made, so to speak. All right. Okay. Well, we only have about 15 minutes left, so I can kind of get started on homework 19. And unfortunately, I do have to do a hard stop at 5 o'clock because I've got an awards assembly for my son this evening, so I won't be able to extend past our hour-long session here. But we can at least get started with question 3. Well, I appreciate that. At least we can get started on question 3 at least for a little bit. So we've got similar information. So hold on one sec. Let me get to this. Okay. And then let's go to our book. Oops, sorry, this is my work. You guys don't care about that. There we go. Okay, this is homework 18, number 3. And then we'll go here, homework 19, number 3. Okay. All right. So we've got a company. They've got given us some information from their balance sheet. That's what this information is. It's got current assets, their buildings and equipment, AP, capital stock, and retained earnings. The gross margin is 30% of sales. In other words, cost of goods sold is 70%. Oh, tiny screen. How's that? Okay, and then actual and budgeted sales. Here's the actual for December, and then this is what the budgeted sales are for the following several months. Okay, sales are 40% for cash and 60% on credit. So that's very similar to the last problem that we just worked on. Credit sales are collected in the following month from the sale. Okay, each month's ending inventory should equal 20% of the following month's budgeted cost of goods. So that's important. 1/4 of a month's inventory purchases is paid for in the month of the purchase. The other 3/4 is paid for in the following month. So that's much like the 20/80 rule that we were using in the previous problem. So as you can see, the problem that we just did is going to be very helpful for this problem as well, even though it's the next homework assignment. Monthly expenses are as follows: commissions, rent, other expenses, depreciation. And then equipment will be acquired for cash. So that's just like the land purchases. And then this talks about the minimum balance that they have to keep in cash as well as the loan that they can borrow. Okay, so again, very similar to the previous problem. So we'll be able to get through at least maybe part 1 and part 2 of this problem. Okay, so let's go back to our Excel spreadsheet. Okay, I'm going to extend this out a little bit. Okay, so the first part of the problem asks you to complete the amount of cash collections you receive from your sales. So we've got cash sales. Oh, actually, let's start with January. February, March. Okay, got cash sales, credit sales. Okay, so they actually already give you January's information for you. Okay, and our total collections. Okay, all right. So you might ask, well, how did these numbers come to play? So I'm just over here to the side. I'm just going to prove out these numbers. So it says here that 40% of sales are collected for cash. So 40% of the current month's sales are collected for cash. So 74,500 are the January sales. So 74,500 times 40% gets you to $29,800. And then the 60% of the previous month, 67.5, so 60% of that will be collected this month in January. So losing out 67,500 times 60%, 40,005. Okay, so this is just proving out how we got these numbers that were given to us in January. So February's numbers, we've got $80,200, and we collected 40% of those. And then the credit sales are 60% of January sales. So 74,500 times 60%, just 44,000. And again, we'll just copy over our summation. That means in the month of February, we collected $76,780. In March, we had $94,100 worth of sales. We collected 40% of those in cash. And then we had 60% of the previous month, 80,200 that were collected. So 48,120. So that gives us a total cash collection for March of 85,760. So for the quarter, okay, this is one where you can just sum across. You collected $99,520 in cash sales, and then another $133,220. This is a little Excel trick. If you just drag, if you select a box and just drag the corner of it down, you're copying whatever formula, or basically whatever contents of that cell down to the next cell. And so since I've got a formula in this cell, it's just going to copy that formula down to the next cell. That's all I'm doing. So sometimes I'll copy and paste, and sometimes I'll just drag it. Yeah, it's just a little pointer. So here, I'm just copying and pasting that formula down to the next one. So it gives us a total collections of $232,840. Okay. All right. Then the next one is another schedule, and I've got 8 minutes, so we'll see how far we can get through this. It says input, it says complete the following, and it's basically cost of goods sold. So we've got budgeted cost of goods sold, and we're going to add the desired ending inventory, which then gives us a total needs. Okay, we're going to subtract our beginning inventory, and this will give us our required purchases. Okay. All right, so it gave us a couple of numbers to start with. This is going to be a summation. So I'm going to go ahead and copy this across. Okay. Less our beginning inventory, which means our required purchases will be our needs minus our beginning inventory. We'll just go ahead and sum that across. Okay. So now our beginning inventory was given to us up here, 10,430. So it's given back to us again here. Okay. And then let's go back to our problem. Each month's ending inventory is equal to 20% of the following month's budgeted cost of goods sold. So that's going to be very important as we figure out what our budgeted cost of goods sold are. That's given here in part A. So we know that 70% of the current month's sales is our cost of goods sold needs, basically. Okay. So, and I should say actually 70% of the current month's sales are our budgeted cost of goods sold. Okay. So in February, we have $80,200 of sales. we need 70% of that for cost of goods sold. Now, we also need 20% of the next month's, of the next month's cost of goods sold. And how much is that? So let's go back here. Next month is $94,100. That's the sale amount. And we only need 70%, right? Because 70% of our sale amount is the cost of goods sold portion, and we need 20% of that balance in our ending inventory. So that gives us $13,174 worth of goods. So our total needs are $69,314, and our beginning inventory for that quarter, okay, is going to be, let's go back to where our beginning inventory, we want our ending inventory would be 20% of the following month's budgeted cost of goods sold. So that means we want the 20% of, hold on one sec here, the following months. Okay, which, oh, yeah, which is this. Sorry. So our beginning inventory is the, for February, is 20% of February's cost of goods sold amount, which is already given to us and calculated in January, if that makes sense. Okay, so if you go back to our February sale amount of $80,200, I'm just going to do a side calculation over here. Okay, times 70% times 20%. That's how we get $11,228. So this is February's cost of goods sold amount times 20%. This is March's cost of goods sold amount times 20%. Okay, so we always want to hold in inventory 20% of the next month's cost of goods sold amount. Okay, and there's a calculation that you have to do in order to get there, which is 70% of that month's sales times 20%. And so if we want to leave $11,228 worth of inventory in January in our ending balance, that then becomes our beginning balance of inventory for February. Okay? So this also means that our beginning inventory for March is going to be our ending inventory for February. Okay? So that gives us then for February our required purchases of $58,086. So we've already filled in the sale amount for March. Okay? So our budgeted cost of goods sold is now again going to be for March $94,100 times 70%. Okay, and now we want to keep in inventory at the end of March 20% of the cost of goods sold for April. So $56,100 is our expected sales for April. We need 70% of that because that's our cost of goods sold amount, and we need 20% of that. So we need in inventory $7,854, giving us our total needs of $73,724 minus our beginning inventory of $13,174, which is also our ending inventory of February, leaving us a required purchases of $60,550. Okay, so let's see here. Okay, so now let's sum. We have for the quarter, these are our budgeted cost of goods sold. Okay, now this is tricky. Your ending inventory for the quarter, okay, is $7,854. You do not sum this. Yeah, I do have to go. Thank you. I've got it. Let me just finish this up. So our ending inventory is $7,854. Our total needs, therefore, is $182,014. We're going to subtract our beginning inventory, which was our beginning inventory way back in January, So this gives us our required purchases of $171,584. Okay, so I'm going to stop there. So I got through I guess part of part two. But hopefully this gives you at least a good jump on question 3 of homework 19. But all this is really doing is breaking up the process of what we did in homework 18 part 3 just into its different pieces. That's really all it's doing. So it may look huge, but once you get down to the once you get to question part 4, all you're really doing is taking information that you've already done and putting it into the chart for part 4. Okay, so if anyway, feel free to reach out to me, text, email, phone call if you have any questions on any of the homework assignments or any of the problems. And thanks, Susan, for coming and participating. And a reminder that next week's session will start at 4:30, not at 4 o'clock. Thank you, Susan. Have a great night. And anybody else that is listening to this or will be watching this, thanks for watching. And again, any feedback would be helpful. I'll remember next time, Susan, to zoom in so that the screen's not so small. All right. Okay. See you guys later.